everyone, it's me, Corey Summers, your local Los Angeles realtor. Today I am here with Leo DePerry and Archstone Financial because we are going to talk about a topic that I think there's a lot of pros and cons to, reverse mortgages. And I know that for me, it's something that I've been completely against for myself. And at one point, when I worked in the financial industry for a financial planner's office, we talked about it as an option for my mother. She was getting close to retirement, and there were some reasons we decided it wasn't the right fit for her. But it is a product that's out there, and it's a product that's changed a bit. And so I thought it would be really great for you guys if Leo and I sat down and he really explained some of the things that's happening with reverse mortgages today, just some of the facts and details and some of the things to consider if it's right for you. Like, should you buy a home with a reverse mortgage? If you're nearing retirement age, should you refinance your home into a reverse mortgage? What is the benefit of having a reverse mortgage? But here's the other side. What does that mean for those you leave behind? Or for yourself? Will you have any equity left? So why don't you share about if someone wanted to buy with a reverse mortgage? What's that process like?
Let me first start by saying that 10,000 people a day are turning 62. 10,000. Which is a lot of people over the course of a year. And 1 in 3 seniors do not have adequate retirement savings. So what the reverse mortgage is designed to do is eliminate your mortgage payment and tap into the equity in the property to either give you a monthly income or a lump sum amount that would sit at the bank and create interest. You can buy with a reverse mortgage, or you can just take your current house, take the equity out of it, and live and use that to live on if you have something like a sickness or a disease or something that you have to deal with. Now, the reason reverse mortgages have had such a bad name, and they did for a long time, is because a lot of people would have a misunderstanding, and there was about that you lose your home under reverse mortgage, which is not what happens at all. When the reverse mortgage comes due, what happens is you or your heirs sell the property, and whatever you get for the property, whatever's left over above and beyond what the loan amount is, goes to you. Now,
wait a second. I don't mean to interrupt you, but I got to stop you for a second.
Sure.
Because one of the reasons that and we decided this wasn't a good fit for my mom was because if she overspent, if she used tapping into the reverse mortgage more than what she had equity in the home, then that debt would fall upon my shoulders or my sister's shoulders. And so that wasn't a good scenario. Plus, as a real estate agent, I truly believe, you should be leaving homes to your heirs, but that's a whole nother conversation. There's other stuff, other videos coming on that topic. But so you're saying that this landscape of reverse mortgages has changed. Is it all reverse mortgages will no longer become a debt for your heirs, or is it a specific product?
No, all reverse mortgages. There's now 2 kinds of reverse mortgages. There's FHA-based reverse mortgages, and there are jumbo reverse mortgages. You can get a reverse mortgage up to $3 million on a property. And all of those mortgages are insured so that no matter what the property sells for, if you owe more than that, you will never be responsible for that additional money. That's built into that loan. That's part of what you're paying for.
Is the insurance an additional, like how you have PMI on a regular loan?
It's part of your payment.
It's part of your payment. Okay.
Right.
All right. Okay. And so what if someone already owns a home? They've retired. Because this is something we go over too. So let's say they're 75.
Mm-hmm.
Their home is not paid off. They have maybe $200,000 in equity, or maybe they have $500,000 in equity, or if they bought their home 30 years ago in California, they have $1,200,000 in equity.
Right.
But they're worried because my income from my retirement is dwindling down. My income from my Social Security isn't much, and I could never afford a payment today if I refinanced my home for $1.2 million. How does that work for them?
Well, first of all, you don't refinance on a reverse mortgage for the full value of the property. It's a number based on your age and the value of the property. So if you're, for example, let's say you're 70 years old, then you're going to get probably about 60% of the value of your property. Now, you currently have a mortgage on that property. If you do, that has to be paid off in that 60%. So this is an example. It's going to be different in every single case. But the difference between the mortgage that's paid off and the 60% value of the property is what the reverse mortgage will give you in terms of in terms of income. Now,
Wait. So let's talk like even numbers.
mhm,
The property's worth $1 million.
mhm,
They owe 100,000.
mhm.
So with 60%, they can only get up to 600,000.
They can get 600,000 minus the 100,000, so 500,000.
500,000. Okay, go ahead.
Okay, so now let me just explain something to you. That $500,000 can come in a number of ways. It can come in one lump sum, be deposited in the bank, or it can sit in an account, which grows at 1.5% a year.
Okay, wait, I'm going to interject again.
Okay.
So, as someone that works in finance and more videos I have coming down the pipeline and talk about ways to increase your money, plus the course that's coming out, 5%? That's not enough. If you get a lump sum of $500,000, you need to talk to someone in finance, a professional. Reach out to me for a referral because there are other vehicles that you can put your money in that will earn far more than 1.5%.
Well, hold on. Let me just say something.
Are
Yeah.
you not allowed to move it?
No, you can move it, but let me just say something. Let me just say something. That $500,000 that sits in that account, you are not paying on that. You are not paying on that until you actually use it. So if you do take the $500,000 out and use it, then you'll start paying on it. The only money you're paying on with that $500,000 in an account is the $100,000 on your loan.
Okay, so your $500,000 is sitting in this account at 1.5%
Theoretically, yes.
interest,
Let's just say
but you're
theoretically.
not paying anything on it at
Right,
all.
right.
You're only paying the mortgage that you owe
On the 100,000.
until you start pulling money out.
Until you start pulling money
Oh,
out.
okay.
Correct. Okay. So therefore, it's basically free money at 1.5% for, actually, they give it to you for 10 years. After 10 years, if you don't use it, they just take it back. You've never paid on it. But if you use it, but it's there for your use if you want to use it. But that's one option. The other option is what's called a term program, where they actually give you're actually paid a certain amount of money every month, and you can set that up for as long as you want or as long as that money lasts. It's individual based on your circumstances. So for some people who need a little extra income, it's a great tool. For some people who have an expense coming up, a large expense, or want to take out money for their grandkids for college, let's say, it's a great option. It depends. I have a client right now who owns 5 properties, and he's buying a 6th property with a reverse mortgage because it makes sense for him to do it. It's not only for people who are struggling to make ends meet or need more income, it's also an investment tool. But that's another conversation and far more involved and would need, personal.
I actually want to dive into that, but before you do, I want to backtrack this a little
Yeah.
bit because something you said just made my brain go, huh. So let's say you're 75 and you're looking at, like, I'm starting to have some issues going up and down the stairs. I'm starting to have some health issues. My last visit to the doctor revealed this heart condition. And you're just realizing that you and your family are realizing you might end up needing help, right? And home health care is expensive.
Indeed.
Going into a home facility is expensive. So at that point, if you wanted to pull out, like this example we just talked about, the 500,000, and this is where I'm questioning that term. You need $4,500 a month to pay for that care. So you could set it up, but will it only last as long as that money's there, or because you had mentioned something before that can it last longer?
Well, there's 2 ways to do it. The one situation I'm talking about, where you put the 500,000 into an account and it bills at 1.5% interest. That's a lump sum. You have to take that out as you wish to.
Okay.
But you can also set the reverse mortgage up to pay you X amount of dollars per month for the rest of your life, or for as many years as you want, depending on how much money that is. And that's something you can have a conversation about to determine what you would want. But you would get a monthly stipend, which would be deposited directly into your bank account.
All right, so the example I just gave, you need $4,500 for home health care. So you set it up to get $4,500 a month until you die. And then when you die, let's say it's negative on your mortgage by $300,000. Your heirs don't owe that $300,000?
Well, hold on a second. Now, this is where it gets complicated. No, your limit of what you can spend is $500,000 in our example.
Okay.
Once you reach $500,000, that's it. You can't go any higher. Unless you do a refinance, and you may be able to do that because your property is probably appreciated and you can get a higher amount out now. But you're limited to the actual amount you can get out. That's it. You can't keep drawing on money. It's only in our example, it's a $500,000 limit. That's all you would have, and that would be given to you over the course of time.
Okay. But you did also kind of mention something that I think we should talk about a little bit, using a reverse mortgage for investment properties.
Yeah.
Please share.
Well, you can't. Well, hold on a second. Let me backtrack. You can't use a reverse mortgage for investment properties. It has to be for a primary residence. That's
Okay.
all you can do. This borrower is 72 years old, and he wants to get a smaller property in Long Beach, and so what he's doing is buying it with a reverse mortgage and keeping his other properties as is.
So
He
his
can
other
do that.
properties are the investment
The
properties
others are
bringing
the
him
investment.
income?
You cannot do a reverse mortgage except for a primary residence.
residence,
And the stipulation is you must live in that property and you must live in there permanently. If you have left the property or don't live in there for more than a year, the note will come due. They will call that loan due.
But what if so he's downsizing. Let's just kind of go over the scenario. So he's moving to Long Beach. What if he realizes Long Beach isn't the right fit for me? I need to be in Playa Vista where everything is walkable and I have more amenities at my disposal. So he wants to sell the Long Beach home because it required him, I don't know, to get on the bus or the car,
Sure.
whatever the
Doesn't
situation
work
is.
for him.
That just doesn't work for him. So if he sold that, the note becomes due, but could he do a reverse mortgage on the next property?
Yes. As long as he lives in it. The only requirement on a reverse mortgage is that you live in the property, number one. Number two, that you pay the property taxes, so you have to pay those taxes, and that you maintain the house and pay the insurance. In other words, you can't have a roof that's collapsing or anything like that. It has to be maintained. So you have to be able to, and there's a financial scenario that you have to go through to see if you do qualify for that. So it's not just anybody can get a loan, can get a reverse mortgage. You have to qualify for it.
Well, what things would help you qualify? Do you have to have good credit?
No,
because you're
credit is not a
retired.
factor. Credit's not a factor. What's a factor is, have you paid your property taxes over the last 10 years?
Okay.
What does your credit look like in terms of how much do you owe, in terms of debt, how much are you generating now in income, and what does that look like? Will you be able to afford paying your property taxes and paying your insurance on the property? And is there enough left to maintain the property?
Okay. Well, I think that's some information. Obviously reverse mortgages, I think we've just kind of just touched the tip of the iceberg. They're a little complex.
Yeah,
so they're
very.
not something you want to make a decision without talking to a professional, sitting down and so just really sitting down and talking with someone I think is important if you're considering this. Because like I said, I worked at a financial planner's office, had to sit down with the owner because we were talking about like some possibilities for my mom and why would this make sense or it wouldn't make sense. And at the time, the loans were different. The loan products were different and it just wasn't a good fit. But as Leo shared, there are some scenarios that it might make sense.
Yeah, and just to back up, if the only thing you get from this is one thing, let that be that a reverse mortgage is a viable alternative to a refinance, and it is a kind of loan that is right for some people, and you'd have to determine that for yourself in a consultation if it's right for you. It's also FHA insured, so it's insured by the federal government. So it's not one of these things where you're going to get your house is going to be taken away or you're going to get ripped off. No, it's highly regulated, and you have to go through counseling to get it.
Oh, wow. So you really have to understand what you're getting into, which
Yes.
I think is important because back when, before the mortgage meltdown, as I like to call it, before the last recession, before the housing bubble, people were jumping into negative AM loans. And I had one, but I worked in the business, so I understood how to use it. But there were a lot of people that would jump into negative amortization loans and then only pay the minimum payment, and after a year owed $100,000 on their house. And then the market turned, and then they were negative, and then it was just like this mountain of debt they could never see a way out of. So it's important to really understand what you're getting into. So this video is probably just tip of the iceberg. If you are thinking about it for yourself or a loved one because you guys are trying to find some solutions, I highly recommend talking to a professional. And if you don't know one, Leo's contact information is below. Mine is. We can refer you to somebody in your area if you're in another market, another state. The point is we want to make sure you're being taken care of by professionals that can truly help you. That's what's important.
And let me just also add to what Corey's saying, because you can also buy with a reverse mortgage. A lot of people who are downsizing, want to move closer to their kids and their grandkids, will downsize and buy with a reverse mortgage, which means that you have to put about 40% down, depending on your age, of the price of the property, and 60% would be the reverse mortgage. So you'd put 40% down, maybe you'd sell your home, and from the sale of your home, which Corey could help you with, you would end up generating enough money to put down a down payment on another property in another state and not have a payment at all on it.
So let's kind of talk that scenario really quick, and then I'm going to wrap this up for you guys. But let's say you bought a home in, what's a good conservative area that's gone up a lot? You bought a home in Orange County, in Cerritos. And when you bought that home 30 years ago, a new construction development community, and it was $175,000. And today, because of the cost of everything going up, and it's a 4-bedroom home, 2,500 square feet, you put it on the market for $949, and you got offers up to $1.1 million. Okay, just again, kind of going over this. So you got $1.1 million. You are going to move to, let's say, Atlanta. Or the greater Atlanta area, not Atlanta proper. You're going to move a little bit outside because your kids live in Stone Mountain, so you want to be near them, and that's a little bit more suburbs. And so you're buying a condo, and the condo price is $600,000, but you only have to put down 40%, right? So 40% of $60,000, that leaves you with a nice chunk of money.
Right.
That's where you need to also talk to somebody about where to put it to make it last, because there's annuity products out there that can last you the rest of your life. There's other places, other investments that are safe, stable, that can earn you a lot more interest than a bank ever will. So again, if you need that type of a referral, reach out to me, set you up. It's just important to me overall, the more that you guys are watching my channel, the more that you understand this is not just about buying a home once or selling a home. It's about your financial future. There are so many people retiring in poverty, so many people that don't know what their options are, that get discouraged, despair, and it's a frustrating situation, and it's very overwhelming. And my personal mission is to see you and everyone I work with achieve the same standard and quality of living in retirement that you were able to achieve in your life.
Right.
And the best bet is to create generational wealth and really set yourself up. But for some of you that are like already in your 60s and you're like, time is running out, I didn't do the right things, oh no, don't freak out. There's options for you. Just got to reach out.
Yeah. And remember, as Corey's saying, that with a reverse mortgage on buying a property, you will never have a mortgage payment. That payment is gone forever. So it's like owning your house free and clear. Same thing.
So I really want to thank you guys so much for watching. If you haven't subscribed to my YouTube channel yet, please click the subscribe button below, the bell for updates, and we're going to have a little chat because we got to talk. Got a family member, need to make sure they're taken care of. So thank you guys. See you next week.
Thanks, Corey, for letting me sit in on you with you.
Absolutely.